How to determine gain. Well, a 1031 exchange defers a capital gains tax, but what is the gain, right? How do you determine the gain? There's a lot of misunderstanding about gain. One of the most common misunderstandings is people think, sell my property, pay off my mortgage, I pay the expenses of sale, what's left over is gain. That's actually net proceeds. That's net cash. That's not gain. What gain is your sale price minus your adjusted basis minus your allowable expenses of sale. So that's usually broker's fees, transfer tax, attorney's fees, items like that. Your adjusted basis is your original purchase price, which is referred to as a cost basis, plus any capital improvements that you've made over the years minus depreciation. So your adjusted basis is a figure that your accountant or CPA should have. So again, sale price minus adjusted basis minus the expenses of sale are what equal gain. And that, if you structure a 1031 exchange, is the amount that you would be deferring. Now, what's also important to remember is a lot of people think that debt is an expense. Unfortunately, that's not the case. Debt has nothing to do with the calculation of gain. Again, the calculation of gain is your sale price minus your adjusted basis minus your expenses. Debt is not mentioned there. If debt reduced the amount of gain, then what everyone would do is just refinance their property before selling it and say, well, this is my net proceeds. In a 1031 exchange, there is a requirement that you replace the debt in order to balance the exchange, to buy for equal or greater. For the calculation of gain, debt does not come into the equation. So again, gain is sale price minus adjusted basis minus allowable expenses of sale. And that is the amount that you defer if you structure your transaction as a 1031 exchange.